This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping the show on June the 18th, 2015. It's a Thursday. Our time is 8:47 Mountain. Our radio show runs on your favorite radio stations, 630 CHED in Edmonton, Sunday afternoon at 3. We have a podcast through iTunes. Type in The World Financial Report on Radio. You'll find us there. We have the shows streaming, archived on Harold's two websites. If you ever miss a show, HESradio.com and rarecoloreddiamonds.com. It's Father's Day Sunday. Happy Father's Day to all the dads. Also the first day of summer. And as we tape today's show on a Thursday, as Harold has Business Friday, we have the news that's breaking as we speak. Beef prices up 30% in the last 2 years. You heard right, 30%. And we're being told there's no inflation. Henry Blodgett, he says, and he is the man who developed BusinessInsider.com, a stock market crash is coming and it may be terrific. Also, the Fed met. They kept interest rates where they are. Janet Yellen, in the statement, was hawkish. When she gave the press conference afterwards, very dovish. In fact, the Fed coming out saying that they still believe they can raise interest rates once, if not twice, before the end of the year. We will have to wait and see on that. Also, the United States. This is a stunning number. If there is another financial system meltdown similar to the financial crisis of 2008, the United States is now on the hook for $26 trillion. Also, the Congressional Budget Office in the United States came out this week and said the U.S. debt picture has worsened dramatically. The U.S. faces massive debt problems. In fact, the debt ceiling in the United States has been stuck for 90 days at $18.1 trillion. The Congress in the United States will have to raise that sooner than later, or they will run out of money. That's as simple as it gets. And speaking of running out of money and hitting the wall, Greece, that whole scenario continues. It's a Greece stare down at a default. We don't know what's going to be happening with Greece. Will they come up with a deal? Will they default? Time will tell. It's a fluid situation, but the citizens of Greece, they're stashing cash and hard assets at their home, diamonds, gold, and silver, and they're stashing cash too. In fact, some people putting $10,000, $20,000, $30,000 in their homes in case there is a default in Greece and they need money. Harold, it was not a surprise to me to hear that people in Greece are preparing themselves for a default. It looks like it seems to be heading that way. The Greek leaders are very obstinate at this point, don't want to make a deal. And the average person, what do they have to do? What we recommend all the time, have that insurance policy in their life, in their portfolio, which is hard assets, gold, silver, diamonds. Because when things get tough, as they potentially could in Greece, you're going to find yourself in a situation where you'll be very glad you had something in your personal possession other than basically worthless fiat currency, Harold.
You bet. And we've seen that so many times over the last few years, haven't we, Randy, as far
Yes.
as currencies becoming worthless. Look what's happening in Venezuela also. Their currency is worthless. In the black market, American dollars skyrocketed by 30%. Most people cannot afford to even eat in those countries right now. And that's not only Venezuela. It's going to be Greece, very close to that. On top of that, Russia. On top of that, Iran. All these countries with sanctions against them. So, again, the currency market is something that most people don't understand, but it is so vital in our life that you need to understand it. And that's why listening to this radio show and getting the newsletter is so important, so you can understand the things that are going to affect you and your investments moving forward, and we try to bring them to you, in terms that are understandable. But things are so complicated now, not only in North America here, but all over the world, is obvious by Greece and the other countries that I just outlined, that we're heading into a time that could be so uncertain and so dangerous that it is really a time to be very, very conservative, not to take unnecessary risks, not to, get frustrated and say things are so rough, maybe I'll take a gamble and go into the futures markets or leverage some stocks don't do that. It's only going to result in disaster. 90% of people that trade in those markets that they're not comfortable with lose all of their money. So, again, that is not the way to go at this point. The way to go is to be conservative. Own hard assets, just like Randy said, just like the experts are saying, like we've been professing for a long, long time. Physical gold, physical silver, don't finance them, don't leverage them, own them outright. It's very, very important. Don't go into the futures market because that's paper assets, and that's where all the problems are going to be. As crazy as it may sound, there are two different markets. There's the paper market that is easily manipulated, and then there's the cash physical market that isn't manipulated. But the fact is, because most people trade gold and silver and commodities in paper, like futures contracts and ETFs, the markets get very volatile like they are right now. Gold is up $17. We broke over $1,200 today. We're at $1,203, but we need several consecutive closes above 1,200 for us to have any bullish feeling short term about this market whatsoever. In actual fact, for the last several months, I've been talking to you about the potential of a short-term drop in the market that'll take gold down to around $1,000 possibly, and silver down to $12 in that area. And I'm even more convinced of that now. Because, and this isn't something that you're going to read in the newspapers. It's not something that's going to be on the financial news. It's something that you need to look for and go to our newsletter in order to see it for yourself. And then if you don't understand it, please call me and I'll explain it to you, because sometimes these articles are so important, but they forget that most people don't understand the verbiage of trading in the futures markets and things. So in the newsletter this week, and it's extremely important that you read this and understand this, because you're going to understand the manipulation in this market and why we're saying that gold and silver are going to drop before they go substantially higher. And we're saying to hold off buying at this point until we see close to the prices that we're recommending. Now, the report I'm talking about is called COMEX Paper Silver, New Record Naked Short Interest. I know that's probably something that you would gloss over because it sounds complicated. But basically, here's the way it is. If you're trading gold and silver in the futures markets, and again, we always say don't trade gold and silver, buy and hold it. Buy it physically and hold on to it. Don't trade it in the futures market where it's very heavily leveraged and extremely manipulated. And who manipulates these markets but the banks? So this report that came out that says COMEX Paper Silver, New Record Naked Short Interest. It means in the every month, a commitment of traders report comes out. It tells you how many people are long the market, means that they feel the market's going higher, and how many investors are short the market that think the market is going lower. And most of the time, the institutions that are shorting the market are these major banks and hedge funds. And that's what's going on at this point. And most of the time, when these huge short positions come into the market, it means that the banks are going to force the market lower at a time when the markets are thinly traded during the summertime, and they could push the market substantially lower. They should be fined for it, but the fact is they make so much money on this, and there seems to be an agenda. And I don't know if the government is behind it, but in this article they do. And I'm going to read part of it to you and try to explain it to you so you'll have an understanding, brief understanding as to what I'm talking about. But then if you want to know more, please call me, and I'll spend as much time with you as you possibly need to understand how vital this is and how you understand it. It says that in 2014, total global mine supply for silver was 877.5 million ounces. So COMEX open interest is now 110% of the annual mining supply. Anybody that knows anything about reading these reports and understanding the commodity laws know that this is, they call it a sick joke. So what they're saying in this report is they need to make a slight correction to the analysis. The 2014 silver production is already used up. It's already gone. 70% of all silver produced is used in manufacturing processes. The other 30% produced in 2014 is sitting in jewelry boxes across India and China, or in bullion that us investors hold on to. Because most silver is produced as a byproduct of mining base metals like copper, for example, and because the world economy slowed drastically or contracted, it is likely that base metal mining production declined. It is thus likely that silver output is declining in 2015. Therefore, the open interest in in silver futures in the COMEX is likely to even be greater than 110% of the 2014 production. So what this basically means is that there's more short positions in the market, more people that are betting that the market is going to fall. That's what a short position is. Then there's actual silver in all of the warehouses. What they're saying is, in any other market, this activity would be stopped immediately by the regulators, the CFTC, the SEC, the Justice Department. But the regulators blatantly ignore the most manipulated market in the history of the world. And you know, again, you've got to read the entire article, but they go on to say that the amount of July open interest, 456.2 million ounces, is 7.8 times greater than the registered silver and 2.5 times greater than the total amount of silver on the COMEX. So the total open interest exceeds the registered silver by 16.6 times and exceeds the total amount of COMEX silver by 5.3 times. This market imbalance represents, first and foremost, a degree of market intervention and price-setting collusion that has never been witnessed in the history of any market, let alone the history of what is supposed a country devoted to free markets and rules of law. They're going on to say that there's a reason the government is enabling this illegal activity to persist and to grow more extreme. I have a bad feeling that no one wants to see this reason, and I have an even worse feeling that we may find out later this year. So basically what it means is that these banks are being allowed to short the market with more silver than exists in all of the marketplace today. And again, for those of us that understand commodity law, it is the biggest manipulation of all time. And from my experience, what it's going to do and why these banks have this short position on is every time they do this, the market goes lower. And with this gigantic position, it just reinforces what I've been saying for the last 2 or 3 months, is that silver's going lower over the short term. This could be the last hurrah. This could be the last final massive position that JP Morgan and these other banks are shorting this market to push it down and scare out all the speculators. All the speculators that are in the market right now that think that silver is going to run, they're buying their long positions. They're going long the market. Now you see these banks coming back in and buying this massive short position, the biggest one in history. Well, that tells me that the smart money says that the market's going to go lower. And if the price of silver goes lower and the price of gold goes lower, and gold drops below 1,100, the mines start to close down because the production cost for gold is $1,100 basically an ounce. But the price of silver is already below production cost levels. So that's why I'm saying that if the mines are going to close, and then more of them are going to close because the price of silver is going to go lower over the short term, that means that we could get down to $12.50 in silver. That would not bother me at all. We're not leveraged. We're not trading the market. And for those of us that want to buy more gold and silver at these lower prices, it's going to be a godsend. We're going to be able to buy gold and silver at what could turn out to be one of the lowest prices and the best opportunities in history. So we're just sitting back and waiting for this to happen. During the summertime, when most people are on vacation and all this is going on, I anticipate that the price of silver will drop down to about $12.50. I anticipate that the price of gold will drop down to about $1,000 on the low. And at that point, we are going to be massive buyers of both of those markets. Because over the long term, there is no doubt that gold and silver are going to be one of the best investments you could make. But right now, we've got an opportunity to sit back and watch them manipulate this market, see the prices go lower. Now, don't forget, we also know that JP Morgan, if I'm not mistaken, Randy, is also holding hundreds of million ounces of physical silver physically.
That's right.
So the fact is, if they're behind this, they're going to push the market down. They're going to buy more and more silver at these lower prices, and then they're going to run this market up. And with inflation and currency problems and everything going on and Greece falling apart and all this happening, we're going to be right on top of this. Between what's happening in the diamond market now and what's happening in the gold and silver market now, I think my clients and my company is poised to make a fortune going forward for everybody. The fact is that you've got to have guts to do this. I don't want you to leverage. I don't want you to finance gold and silver and get into trouble. We can make enough money owning it physically, and again, we don't want to trade it. We want to own it outright. If you don't understand this article, it is in the newsletter. Call me during the week, and I will spend as much time with you and explain to you how important it is to understand what's happening in the markets at this point. And if gold and silver do drop to the levels that I'm anticipating that they will, that it's not a negative situation. The only way it's negative is if you're leveraged, because you could get knocked out of the market, and that's the last thing in the world you want to do. You do not want to be out of this market when it starts to run again. Don't forget, when we recommended gold back, back almost 15 years ago, gold was at $250. It went all the way to $1,900. Silver went from $4 all the way up to $50. It came down because of manipulation, and you know the reasons. We've talked about it many, many times, that they raised the margin requirements and made it too expensive to trade it. We're in a position to make a lot of money. We're going to be able to sell you physical gold at spot price with no commission very soon. We just found out that we are just a few weeks away from getting our importer's license. We've already been approved through South Africa to export, so the timing should be perfect. We're going to be able to bring to you the right instruments for you to get through these extremely difficult times and make some serious money. It's not in the stock market, it's not in the bond market, and it's not trading and leveraging commodities. It's being more conservative, owning the right assets at the right time. And again, there's no egos here. I speak to clients every single day. I don't care how much money you have, whether you're a multimillionaire or you're just getting by, but you have money in the market and you need to understand what's going on. I'm here for you. That's why we do this radio show. It's not for the Warren Buffetts of the world. It's for all of us small guys out there that need to have the information that they need to make the right decision. Randy and I have been doing this show now for almost 15 years, and we brought you news that nobody else has brought you and recommendations that nobody else has brought you. And even when business is slow and other companies go off the air because of bad calls or whatever, we've been there every single week for you, and we will continue to do so. So these are very important times. We want to make sure you understand what all of your options are moving forward. So please get the newsletter this week. It's totally free of charge. And if you don't understand what's going on, pick up the phone, call the toll-free number, and I will definitely take your call. 1-800-432-1022. 1-800-432-1022 to speak personally and privately with Harold about investing. You have any questions? He'll be happy to talk to you. His website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. Our featured diamond of the week is a 1.23 carat marquee cut, fancy, vivid, yellow, internally flawless. There were a lot of yellow flawless diamonds that sold at Christie's important jewel sale during the week. We'll talk about that in the second half of the show. But take a look at our featured diamond at rarecoloreddiamonds.com. It's in our newsletter, a 1.23 carat marquee cut, fancy, vivid, yellow, internally flawless, a must-have for your diamond portfolio. And one of the things you have to keep in mind when Harold is talking about the recommendations that he makes, hard assets, he walks his talk. Everything that he's recommending, he is doing himself. Greg Hunter interviewed John Embry from Sprout Asset Management during the week, and he said there's no doubt about it, another financial calamity is coming. In fact, Embry says it's unavoidable. It's inevitable is the word I would use. There is no getting out of it. If you thought 2008 was bad, and I thought it was terrible, this time there is no ammunition left. You can't take interest rates any lower. All you can do is print even more money. That really didn't work the last time. The safety nets are largely gone. If we do run into something untoward,
and it could be fairly soon. I think there really is, he goes on to say, I don't think there is really anything left to stave it off. I don't think they will refuel the period from 2015 to 2020 like they did after 2008. I think there will be a much uglier time. I think it will be much uglier. One thing that could touch off this next meltdown is the Greek debt crisis. I think it's extraordinarily serious because there is no palpable solution. Well, I say there is no palpable solution. Theoretically, if you loan people money, I think it is incumbent on them to make sure that they can pay you back. In this instant, the Europeans put more and more debt on the backs of the Greeks to keep them current. Now, when it's becoming obvious that they are basically utterly insolvent, they just can't sort of dismiss them easily. This paper is all through the European system. I believe there are a lot of credit default swaps written on it too. If the Greeks walk away from this and essentially default on the paper, I think this is a major story. The fact that they're trying to downplay it probably speaks to the fact that it is a major story. John Embry goes on to say, I think there's a possibility of a Greek exit from the EU, and if that happens, we're going to be facing an awful lot of financial chaos. How will gold and silver do in the next meltdown? I find stocks severely overvalued, and I find bonds more overvalued, and I would even lump urban real estate into that category as well. So traditional assets are extremely overvalued. To me, the two real undervalued assets are gold and silver. They are significantly undervalued, and everyone hates them. Embry goes on to charge, I would say gold and silver are as cheap as they were when gold was $250 an ounce and silver was $5 an ounce. They are the cheapest assets on the planet. It was interesting this week. Avi Gilbert wrote an article for MarketWatch, and he actually is making a recommendation that you actually have hard assets like gold and silver in your portfolio. And he goes on to say he thinks that gold could go to, and this is a huge, huge number, $25,000. Read those articles in our free weekly newsletter. Get them from Harold at 1-800-432-1022. RareColoredDiamonds.com is Harold's website. We're going to come back, and we will talk about diamonds. It was a very interesting week for diamonds, and I should mention that go take a look at our featured diamond of the week. It's a 1.23 carat marquee cut, fancy vivid, yellow, internally flawless. Go to RareColoredDiamonds.com, click on Featured Diamond of the Week, and you will see this museum piece type diamond. Coming up in the second half of the show, Christie's had an important jewel sale. There were lots of yellow fancy diamonds that went on the auction block. And speaking of yellow diamonds, Lawrence Graff unveiled a 132-carat Golden Empress fancy yellow diamond. We'll talk about those and more as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on June 18th, 2015. Our time is 9:11 Mountain. Our radio show is archived. Ever miss a show? The shows are streaming live at HESradio.com and RareColoredDiamonds.com. Our show runs on 6:30 CHED Sunday afternoon at 3. We have a podcast. If you are one of those people that like to get out and about, and don't forget, we're portable. We go on any portable device you have. Connect with us through iTunes. The podcast section, type in the World Financial Report on Radio. You will find us there. Harold's website is RareColoredDiamonds.com. RareColoredDiamonds.com. And as Harold generously offered in the first half of the show, he's willing to speak with anyone at any time if you have any financial questions about what's going on in the world today. And his number, it's a toll-free number, does not cost you a thing, 1-800-432-1022. Give Harold a call, talk to him about where you are at financially, and he'll be happy to explain the markets, and where he thinks things are going in the future. 1-800-432-1022. Our featured diamond of the week is a 1.23 carat marquee cut, fancy vivid yellow, internally flawless. You can see the diamond at rarecolorediamonds.com. Click on featured diamond of the week. And Harold, this would be another one of those outstanding diamonds to start a portfolio with, add to a portfolio. In fact, it would be a great jewelry piece. The marquee cuts look very good in jewelry.
You better believe it does, and this is a beauty. First of all, a marquee is a very rare cut, one of my favorites, and this is a wide one. They, sometimes they're thinner depending on how they come out of the ground as a rough diamond, but this is nice and thick in the middle. It looks much bigger than it is. It looks like it's a 2 carat, but the thing about the color is that it's spectacular. If you see the diamond in person, you'll just flip over it because the color is perfect. So the way that the Gemological Institute of America, GIA, grades diamonds based on their color is that the higher the saturation, the more expensive the diamond. So when it comes to yellow diamonds, some people think that yellow diamonds are just poor quality white diamonds, and that's true to an extent on the very, very low end of it. So a faint yellow diamond could just be a very poor quality white. But you need nitrogen in a diamond for it to turn yellow or orange. And this diamond is a tremendous example of the highest saturation, a phenomenal cut. The carat size over a carat is a 1.23, so it's a nice big diamond that looks like it's a 2 carat. And then on top of that, the clarity is the best that you can get. So this particular diamond is the best color, and the best clarity that you can get in the marquee is a very, very rare cut. So this is a special diamond that will do tremendously well. So the way that GIA, Gemological Institute of America, grades yellow diamonds, faint is the lowest color, very light, light. None of those are investment quality. When you get into a fancy light or a otherwise known as a canary diamond, if it's internally flawless and a really pretty diamond, yes, some of them do have strong investment capabilities that will make that diamond go up 10 to 15% in a year. But after you get into the better colors, the more saturated colors like the fancy yellow, then the fancy intense yellow, they get more expensive based on their color. And then if everything is even to where it's a good diamond over a carat, so it's a good size, it's internally flawless, which is the only clarity that you want to buy when you're buying a yellow diamond for investment purposes. So again, now you're looking that this diamond is fancy vivid, which is the best color that you can possibly get graded by GIA, Gemological Institute of America. On top of that, it's internally flawless. So a diamond like this will easily go up by 15 to 20% a year. In fact, try to find a high-quality, vivid yellow flawless diamond today. They're almost impossible to get. Now, there's also diamonds that come from different areas. The diamonds that we sell come from South Africa. They're vibrant, they're beautiful, they have fire, they're very, very strong, and the colors are very strong. Then you've got the diamonds that come from India. They're about half the price of a diamond that comes from South Africa, a good quality one. So everything being even, a diamond from India, which is brittle and lacks the fire and sparkle of a South African diamond, can be half the price of a diamond, of a South African diamond. So I don't want you to be confused about this. To get a very high quality, fancy, vivid yellow, internally flawless diamond, depending on the cut and how strong the saturation is, you're probably paying between $75,000 and $100,000 a carat. So if you happen to come across a vivid yellow flawless diamond that's in the 30, 40, 50,000 range, you can certainly tell by that there's a huge discrepancy in the prices, and you're going to wonder, well, is one company charging too much, or why such a big discrepancy? The reason is the diamonds that come from India are of much lower quality. They're brittle, they don't have the fire of a South African diamond, and even in white diamonds that come from India, they still don't have the fire that a good quality white. So again, you know the difference by the price, and the other thing is you always get what you pay for. There's no such thing right at this point as deals on diamonds. Diamonds are so important with what's happening in Europe, with currency devaluations, with what's happening in Greece and what's upcoming. Diamonds are one of the best investments you could make because they could be sold in other currencies. So with what Randy was saying when we started the second half with Greece, the fact is that when your money is in the euro for these past 10 years, and the euro was a strong currency, is at 150, 140, 160 in that area. Now the euro is at 110 or 112. The fact is that it could go even lower. So in that alone, anybody who had investments in euros has seen a big decline in their investments. But now, if Greece is out of the euro and out of the euro community and have to go back to their old currency, it's going to be at about a quarter of what the euro was. That means that everybody in Greece, as their currency gets converted back, is going to lose 3/4 of their net worth. So that is the perfect opportunity while you're still on the euro to convert some of your money, buy a diamond that could be sold in US dollars or in British pounds or in euros, and put that away, because otherwise you're going to get killed in the market. You're going to see that all of your assets that are based in euros and in the drachma are going to plummet by 3/4. So again, that's why diamonds are so important. They're portable private wealth. Investment quality diamonds never decline in value. There's so few of them available. To get a yellow, vivid, flawless diamond today of good quality is nearly impossible. And moving forward, there will be very, very few of them. So it's a great opportunity to invest some money in an asset that goes up by 15 to 20% a year, that never declines in value, and could be sold in another currency. And again, for all of our clients in Canada, again, you're living that currency devaluation firsthand. Just over a year ago, the Canadian dollar was at par with the American dollar. Now it's down by 20, 25, and soon to be possibly 30%. How quickly that happened. All we have to do as Canadians is travel to a country that has a stronger currency, like the United States, and you'll feel the pinch. Let's say you wanted to convert $1,000 Canadian, you're only going to get back about $750 American. Or if you wanted to buy $1,000 American, it's going to cost you $1,250 Canadian in order to do that. That's what I'm talking about, currency devaluation. And that's why it's so important to be in hard assets. Gold, silver, especially diamonds, will not only save your financial life during these times coming up, but on top of that, you can make a tremendous amount of money. So we're recommending very, very substantially yellow flawless diamonds. Randy's going to get into now the auction results, and a lot of them are for yellow diamonds. We've been recommending yellow diamonds to you for the last 10 years, and they've been not doing nothing but going up in value, and the future is even brighter. But one thing you should know is that owning diamonds is not a short-term investment. You don't buy a diamond today and look to sell it in 3, 4, 5. You're not going to make any money on it. You need to hold it for a longer period of time, 10, 15, 20 years. In fact, many people that hold diamonds for long periods of time have seen returns that you never see in any other investment. I've mentioned this many times. 50 years ago, you could have bought a 5-carat pink diamond for $50,000. Today, that diamond's $5 million. That's what you want to accomplish in the rare diamond market.
RareColoredDiamonds.com is the website. Featured diamond of the week, a 1.23 carat, marquee cut, fancy, vivid, yellow, internally flawless. Connect with Harold at RareColoredDiamonds.com or give him a call. He'll speak with you personally and privately. 1-800-432-1022, 1-800-432-1022. And as promised, here are the auction results, and Harold is right. Most of the diamonds at auction this week were yellow diamonds. Christie's Important Jewel Sale, June 16th, 2015, New York City, Rockefeller Plaza. Lot 181, a colored diamond and diamond ring, set with a modified cushion-cut fancy intense yellow diamond, approximately 28 carats. The estimate on it, $700,000. It went for $857,000. Lot 73, a colored diamond and diamond ring, set with a modified cut, cornered rectangular cut, fancy intense yellow, weighing approximately 13 carats. The estimate on it was $250,000. It sold for $341,000. Lot 55, a colored diamond and diamond pendant necklace. And this is a beauty, suspending a pear-shaped diamond weighing approximately 5 carats, trimmed with circular cut diamonds, and a modified pear-shaped fancy purplish pink diamond. And the estimate on this was $280,000. It went for, the price realized, $317,000. Lot 200, a colored diamond and diamond ring by Graf, set with a modified cut-cornered rectangular cut fancy yellow, about 14 carats. The estimate $250,000. It sold for $293,000. Lot 141, a colored diamond and diamond ring, set with a modified cut-cornered square cut fancy intense yellow, weighing, and they're saying, approximately 9 carats. The estimate on it, $140,000. It went for $250,000. That was a very, very big winner. But one of the ones that really caught my attention, it was lot 130, an unmounted colored diamond, rectangular cut fancy vivid yellow, weighing approximately 3.45 carats. The estimate on it, $50,000. It went for double, $106,000, $106,250. Lot 130. If you would like to see all these auction results, and there are many more, we would be happy to send them out to you. Speak with Harold at rarecoloreddiamonds.com or call him. He'll speak with you personally and privately. Everything is 100% private. 1-800-432-1022, 1-800-432-1022. And in our free weekly newsletter, get our free weekly newsletter from Harold. Graf unveiled a 132-carat Golden Empress fancy yellow diamond. Just released images of a new statement diamond to add to what is a very long list of diamonds that are among the largest and rarest in the world. Graf's latest catch is being called the Golden Empress, a 132.55-carat fancy intense cushion-cut diamond. The diamond set is on a necklace with approximately 30 other diamonds, and they say here fancy colored diamonds are popular as adornments and investment because of their beauty and rarity. Only 1 in 10,000 diamonds discovered are classified as fancy colored, so it's even rarer to find one in a particular color, such as this yellow diamond. Harold, this is a stunning piece, and our featured diamond of the week is a yellow diamond. If you would like to start a portfolio, add to your portfolio, we have that 1.23 carat marquee cut fancy vivid yellow, internally flawless. It can be seen at rarecoloreddiamonds.com. Click on featured diamond of the week. But yellow diamonds, and this is something you brought to our attention. I've said this before a long time ago. They have become real stars of the diamond world.
You bet, and they will continue to be. You know, you always want to buy the best quality that you possibly can. All of our yellow diamonds are flawless. We only sell internally flawless yellow diamonds because they have a track record. Anything under that does not. So again, all of our clients that do own them, and I own several, and my grandchildren have them put away for their future. I don't buy stocks for them. I don't buy bonds. I don't buy real estate. I buy diamonds. I put them away in my kids' safety deposit boxes, and when they get to be ready to start in this world, they're going to have something substantial. Whereas if you put stocks or bonds, it's just total speculation, and I'm not a speculator. I'm somebody who's very conservative. I know the markets well, but I tend to go where the safety is. And again, it's more about capital preservation at this point than it is about capital appreciation. But I'm 100% convinced that gold, silver, and rare diamonds will not only preserve our capital, but make us more money going forward than any of the other markets. The other market that you want to look for is the pink diamond market. It's one of the best markets you could ever buy. We know that the Argyle mine is going to close soon. They produce almost all the pink diamonds in the world, which is a tiny little number, but the price of pink diamonds are skyrocketing, and within the next 5 years, we anticipate that some Argyle pinks, especially the vivids, could triple within the next 5 to 10 years, so, or even higher. So we're extremely excited about what's happening in the rare diamond market, and we will bring auctions to you by the end of the year during the summertime when things are slow and most people are on vacation. We take a break from the auctions, but coming back in September, October, November, we're going to have some very, very exciting auctions for all of our listeners.
And Harold's company, rarecoloreddiamonds.com, along with Diamante Atelier, had some very nice investment diamonds that went to some investors. In fact, you can read in our newsletter, a 1.55 fancy deep green ring and a .66 marquee fancy intense orange diamond was sold by rarecoloreddiamonds.com and Diamante Atelier. Also, an Argyle pink diamond necklace and ring valued at close to $900,000. Now, there is a catalog that Diamante Atelier and rarecoloreddiamonds.com have. It's the collection 2015. If you would like Harold to send you that catalog and you would see some of the world's finest investment diamonds, he will be happy to do that. Also, in our free weekly newsletter, we have Diamonds, Timeless Gems in a Changing World. This is a report by Bain & Company, and it really highlights the fact that in the past, it was North America and Europe that were driving the investment diamond and diamond market. Today, we're seeing a switch to the Far East because we're seeing people increase in wealth in China, also in India. And you take a look at those two countries, they're not known for investing in diamonds or having diamonds. They've always been more focused on gold and silver. That is changing. And we're having no new mines come on, and as a result, you're seeing some shortages, and it's going to be a very exciting time in the future for those that hold diamonds, according to this Bain & Company report. You can read it. We have it. We can send it out to you. It's in our free weekly newsletter, Diamonds, Timeless Gems in a Changing World. And Harold has become a worldwide authority on investing in diamonds. In fact, he's been on Fox Business News. He's been on Bloomberg television and radio. And last year, he was on the Jerry Bovino show in Colorado. And that is a must-watch. If you have not seen that show, I would really encourage you to do. You really will get an understanding of Harold Siegel, the man, and his philosophy in business. We can send that interview out to you as well, the Jerry Bovino show. And who knows, Harold, maybe Jerry will have you back on the show as you head out to Colorado very, very soon.
Well, it's always my pleasure to do that and to bring the passion that we have in the diamond market and the hard asset alternative market to the people. So, again, I'm excited. I'll be leaving Saturday for Colorado. I'll be out there for 4 months. I have my office out there also, so I work every day, and everybody can reach me there. But for those that know Florida in the summertime, you know that this is not the place you want to be. It's hurricane season. So looking forward to getting out there, but I'm very excited about what's happening in business. Obviously very cautious, very concerned about what's happening in Europe and Greece and everything, but I believe we have the right game plan. I believe that by being conservative and not speculating and owning alternative hard assets like gold, silver, and diamonds, I believe is a way to get through this. And again, history will repeat itself, and if you go back in history, you will certainly understand what we're talking about.
Featured Diamond of the Week from rarecoloreddiamonds.com. This is a 1.23 carat marquee cut, fancy vivid, yellow internally flawless. See it at rarecoloreddiamonds.com, rarecoloreddiamonds.com, or call and speak with Harold at 1-800-432-1022. We will be happy to put your name on our list for our free weekly newsletter as well. We like to give you the latest information, freshest information every week. We don't want the same show rehashed over and over. We give you the latest news from our newsletter that we put together, and it's on the show every week. You can be on the same page that Harold and I are on, see the same information, see what we're seeing, and you can do it by connecting with Harold at rarecoloreddiamonds.com, 1-800-432-1022. In fact, in the newsletter, there's quite a bit of news that I think really should open up some people's eyes. The cupboard is bare. New York food banks are running out of stock. More than a third of New York State's food pantries have had to turn away people in need because they are running out of supplies. food banks have been demanding an additional $16 million to replenish their stock. An estimated 1.4 million New York State citizens rely on food banks. We keep hearing how great everything is in the United States. And then we come across a story like that, and we have to say to ourselves, what's the truth? What's really happening in the United States and around the world? One of the other stories that we came across this week, and you can see it in our newsletter, in Greece, there are many young children who left the home at 18, 19, 20 to go out on their own, and now they are coming home because they just cannot make it financially. So you have a lot of people moving back home. And geopolitically as well, I think some of the things that caught my attention, they said that Global Peace Index report, world is less peaceful today than it was in 2008. According to the annual Global Peace Index, ISIS is gaining momentum in the worst possible way. They're actually ISIS. I know that we are fighting them, but they are gaining popularity in the country that they're at because they're providing security and providing jobs. Russia's military warns of a new military confrontation in Europe. Stratfor, an organization that monitors the world when it comes to geopolitical events, has 11 chilling predictions for what the world will look like a decade from now. Also, you have Ebola coming up again. In fact, there are Ebola scares. It's on the rise, and the world is no better prepared today to deal with it than it had been about a year ago. Those are some of the stories you'll find in our free weekly newsletter that you can receive from rarecoloreddiamonds.com, or call Harold and speak with him personally and privately at 1-800-432-1022. Our featured diamond of the week is a 1.23 carat marquee cut, fancy, vivid, yellow, internally flawless. And Harold, we have approximately 2 minutes left, but it's a time when you look at, we're taping on a Thursday, so we don't know what's going to happen later today or Friday, what's going to happen going into the weekend with Greece. But quite easily, Greece is getting down here to the end of the month where they need to make a payment. If they do not, they will default, and more than likely they could end up out of the Eurozone, and we could see some major fireworks in the financial markets.
Well, we are expecting that. Again, when a country goes under, initially it's going to affect the markets, and then the markets, after about 3 or 4 days of volatility, will sort of peter off type of thing and start to trade on their own volition again. But again, I feel terrible for the people of Greece because, again, they're going to see their net worth plummet substantially just when their currency goes back from the euro to their old currency, and that's not a good situation. So again, we got to be smart about this. What's happening in Europe could easily happen here. What's happened in Europe has already happened here to a certain extent. We know that the banks are not in good shape. They're charging you in Europe to keep your money in the bank. That's coming here also. They're talking about a cashless society. They're talking about all these things that will totally control our money for us, and we don't want to be privy to that. So again, own hard assets, gold, silver, diamonds. That's your one escape from paper assets that, again, are going to end up destroying the financial world as we know it. We got to be smart about what we're doing.
Well, you take a look at some of the headlines. Budget Office in the United States. U.S. debt picture has worsened dramatically. They're warning that the United States faces a massive debt problem. And the debt ceiling in the United States needs to be raised. It's at $18.1 trillion. It needs to be raised up again. And if there is another financial catastrophe similar to 2008, they have actually done a study now, and the United States would be on the hook for $26 trillion. So you can see that in the world that we live today, financially, geopolitically, you need an insurance policy in your portfolio. Harold, thank you for a great show, and have a great Father's Day.
Thank you very, very much. I wish everybody a wonderful weekend. All the fathers out there, it's our day. Have a wonderful Father's Day and a profitable day on top of it.
Connect with Harold at rarecoloreddiamonds.com. Speak with him about our featured diamond of the week. Call him 1-800-432-1022 1-800-432-1022, or go to rarecoloreddiamonds.com. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.